This show will be talking about various financial, business, technology, and investment topics. Nothing in this podcast should be taken as professional advice, as it is for educational purposes only. All topics are complex and require research. Please do your own due diligence. Enjoy. Thank you, ladies and gentlemen, for huddling back up with us here today on Wealth Huddle Podcast. I am your host, Ayan Rahman. I am glad to bring you guys some more news on the recent crypto markets and some of the recent news that you've been seeing in regards to regulation as well as the bull market. Many people have been looking at the crypto run-up as of late and have said, well, when do I get in? I have seen that text many times from people within my friend group, from people who have no idea about Bitcoin and Ethereum and all these other cryptocurrencies, right? So during our last episode, I had made a prediction that by the end of 2020 into 2021, we would see not only Bitcoin hitting 30K, but us surpassing that value. But what exactly does that mean? Right now, Bitcoin is sitting around 35,000 per coin. And then on top of that, too, we had predicted that Ethereum was bound to make a breakout. And right now, if you guys are watching this episode, Ethereum is approaching its all-time high. Just last year, if you were looking at the end of December, it was barely 50%. Now it's almost about to touch that exact value of about 1,500 for Ethereum's all-time high. So the question may be is, am I missing out? The reality is, no, you're not. And that's the thing you have to understand about the crypto industry, is that it's so young that if you're worried about when you want to get into the market or even trying to time it, timing the market is the worst thing you can do. First of all, think about it like this, right? If you are only putting in a couple of $100 into either, let's focus with Bitcoin especially, right? Because it's a far more history behind it. It has a lot more user. Its network is what really provides its stability as an asset. It's what a lot of people are turning towards during this time of hyperinflation and government intervention. So with this going on right now, if you guys are wondering, oh, well, I only have $200-$300 to put into Bitcoin, should I wait for it to drop? When's the perfect time for it to drop? Do you guys expect it to drop? Right? When people sent me those kind of messages, that to me says you're not really understanding what the overall value of Bitcoin is, right? Because Bitcoin is a play for the long run. It's not something that you just simply put money into and then 2 months later you want to pull it out. If that's the case, then you have a trader mentality. Trader mentality with Bitcoin is really only good for people who have the bandwidth to do so. Trading is something that I stay completely away from, especially with cryptocurrencies. And personally, for me, I'm a big believer in what's known as Huddle, right? So if you guys are familiar with Bitcoin, and those of you who are not, no worries. Huddle is simply just a meme that was created by the Bitcoin community because it's essentially just referring to holding on to Bitcoin for the long run, right? So to understand where Bitcoin can be 5 to 10 years from now, you have to understand that Bitcoin's scarcity is what's driving its value. On top of that, it's hedged towards this hyperinflation period where a lot more government stimulus is coming out, is why people want to put their assets into Bitcoin. Essentially, what's happening now is these couple of $100 up and down swings that you may be seeing, a few $1,000 swings, is very, very typical of any market, right? And especially when you're looking at Bitcoin, if you guys are worried about a 30 to 40% pullback, then that's exactly what Bitcoin will do. It's just how the market is, right? There'll be times where people are very bullish. There'll be times where people are bearish. It's all dependent upon the overall ecosystem. Bitcoin right now is at a point where it's sitting at around 35,000. If the market drops down to 30,000 and you're trying to wait for it to hit that point, you're not really playing the long game, right? Bitcoin is inevitably going to hit a six-figure point. I'm not going to say what my price analysis is. You can go ahead and check that out. There's a lot of links. You can check out Goldman Sachs. You can check out JP Morgan, which is one of my favorites, because if you guys know JP Morgan, their CEO is very much outspoken about Bitcoin and cryptocurrencies and all these things like that. But over the past few years, it seems like his company has become the evangelist for modern banking systems. With that being said, don't wait for a few $1,000 swings. Don't wait for a few $100 swings, because in the end, if you're looking at Bitcoin as an investment, not a trade, it's going to increase over time, because as it becomes more scarce, as more of the coin, more of the circulating supply of that 21 million is taken up, more and more people will want to get their hands on what's left, because eventually what's going to happen, and this is something that I just read this morning, is a lot more institutional family offices are coming into the market, the Bitcoin market, and buying and forgetting, right? So that doesn't mean what they're doing is buying it and just saying, oh, I don't care about Bitcoin. They are buying it and literally saying, I know what I'm going to do with this asset. I want it for the long run. I'm never going to think about it because I know what its value will be down the line. And that's the exact mentality that you want to have when you're purchasing Bitcoin. I want to move on to another topic, this recent Ethereum blast off. Right, I've been a big fan of Ethereum for quite some time. I think Vitalik, the founder of Ethereum's blockchain, is one of the most talented developers and one of the most intelligent people in the ecosystem. They're essentially the way that if you want to look at Bitcoin as gold, the digital gold, I think you have to look at Ethereum as the infrastructure or the technology, the software for the future of finance, right? So if I was going to compare it to something, the best way to look at it is think about Microsoft in the 90s, right? Or Microsoft even till this day. Microsoft has created Windows, has created all these tools like Word, Excel, PowerPoint, etc., that are used across industries, right? It's become the foundation of what so many people are doing with their work lives. It's the software behind how companies run today, right? But I want to take that exact concept about it being a software. It's the infrastructure that is being utilized to build the future of finance. Ethereum is that software. It's the underlying blockchains, the underlying technology that's powering so many of these new movements that we're seeing within the web, the new web industry. So if anyone's familiar with this terminology, it's called decentralized finance or DeFi. These are simply programs that are built on top of Ethereum, right? So within the blockchain community, there's something that we call smart contracts. What smart contracts are literally just lines of code that are created on top of a blockchain. And essentially what happens is when you input information into that smart contract, if the information matches up and the necessary requirements are met, then you get a result. That result could be, increase the amount of money that you're making, right? Like yield returns. It could be a reward, etc. So a lot of these sorts of protocols are being built on top of Ethereum, which is why I think Ethereum in the long run, as well as Bitcoin, is going to be very valuable. I think with Ethereum too, if you want to talk about room for growth, Ethereum has that, because essentially you're going to see a lot more financial institutions coming in and saying, yeah, we want to be a part of this infrastructure. We want to learn how we can use it to build out stable coins. We want to learn about it to build out new financial services, right? We call it decentralized finance right now, but I think in a few years we'll be calling it financial services, period. So there was breaking news recently in the industry from the U.S. Treasury OCC. This is the largest U.S. banking regulator, and they had come forward with new guidance that is allowing U.S. banks to leverage public blockchains and utilize dollar stablecoins as a settlement infrastructure for the U.S. financial system. So that's a mouthful. What the heck does that mean? To break it down, essentially today, one of the biggest problems I can think of within the banking system is the need for there to be these intermediaries, right? You have these banks that are in power currently, and there is no way for us or any other bank to put checks and balances into place to see what exactly is occurring within those banking networks, right? One of the biggest problems that I can think about is when you are trying to send money to someone on Christmas. Christmas is one of those days that you want to be able to send money to someone, but on those days, I can't wire money. Now, the benefit of utilizing a public blockchain is that when a transaction goes through, it allows for automatic or easier settlement because there are multiple different participants in that network. So I'm not just relying on one bank or the receiving bank to validate my information. Instead, now it's a network of these banking institutions that are going to be different nodes within the network, and they will actually confirm that transaction. So that way, if I wanted to send someone money on a 24/7 basis, I can do so because there's various institutions that are validating that I have the funds, that I am sending those funds, that the person I'm sending to, they're also a good player, etc. Right? So This establishes those banks to treat public chain infrastructure the same way we look at wiring, ACH transfers, etc., right? And I think even more impressive than this is the idea that stable coins are going to be utilized as an electronic store of value. For many of you guys, during the past year, we all went through a period where we were struggling to receive just simple checks from our government, right? These stimulus checks that we were supposed to receive as a result of the COVID virus outbreak. And it took us about a few weeks just to get $600 recently, right? Now, a good way for us to be able to leverage a stable coin in this situation, or a public blockchain infrastructure, is that every single person in the United States could have a specific code. And thankfully, in the United States, we do have a specific code that identifies us, and that's our social security number. Now, imagine if the US is able to directly send you a payment utilizing a digital currency, because they have access through the public blockchain, a hash information that represents your identity. No one else knows who it is, except this public address shows that it's going directly to you. That makes the whole entire process so much more easier, right? When you talk about a decentralized, a permissionless, open source, and internet mediated software that's creating the foundation for the United States financial system. That is something that we genuinely need in this country. I think too that this recent news will actually pave the way for the leading digital currencies and USDC, USDT, right? The United States digital currency, United States digital token, as a mainstream payment medium for all forms of payment. So not just your settlements, right? This can include actually transacting with retailers, because if you guys remember, earlier this year, we had PayPal actually come out and say they're going to be utilizing Bitcoin as a part of their payment systems. Now imagine if these stable coins begin to be integrated by platforms like Stripe, like platforms like Shopify. All of a sudden now I don't have to wait for an ACH transfer from my account. I don't need to wait for the bank to take 3 to 5 days to do settlement, all those things like that. Instead, it's digital stable coins, digital currencies that are representative of real dollars, and they're simply being transacted on a public blockchain. So that way, every single time a transaction occurs, it can be settled within minutes, because there are multiple different nodes within the network who are validating that transaction. So that is actually what I'm really excited for. In regards to where I see the markets going, I want to kind of bring it back to Bitcoin first. And I want to remind people that in these bull markets, we're always going to see drops. Right? There will be 30 to 40% pullbacks. It's not a secret, right? So if you're thinking that, oh, well, if I put money today and then there's a 30% pullback, I'm going to lose money. Yes, you will lose money in the short term, but in the long run, the way that Bitcoin's algorithm works and its current foundation, you're going to look at potentially between 3 to 4x return by the end of next year. Now, I'm not giving my word on that. That's, do your own research. But based off the way that institutions are coming in and buying up Bitcoin and chomping it up like it's nobody's business, that growth is very likely to happen. I mean, to hit 35K by the beginning of 2021, I would have never expected that. So to say that we can hit 6 figures is not out of the question. But again, so that goes back to 30 to 40% versus potentially 3 to 400% return. I mean, you're netting about 360 to whatever percent in return. So that's kind of how you have to think about Bitcoin in the long run. We're still very, very early in adoption. I don't think we're going to be breaking the adoption pattern within the next 5 years, right? So just take some time to understand what Bitcoin is, right? And then from there, dollar cost average in. I can't stress this enough. DCA is the best way for you to adjust for any sort of risk associated with Bitcoin, right? Bitcoin is a risky asset itself. So if you are worried about, oh, well, I only have $200 every month to invest, well, that's fine. No one's telling you to put in 1,000, 2,000, 3,000, even 10K today. Bro, go ahead and put whatever is reasonable for you, but make sure you're doing a genuine investment every so often, because that's going to help you counteract your risk. Thank you guys once again for joining the Wealth Huddle podcast. If you guys have any sort of questions or even have any topics that you want to suggest for us to discuss more so on our next episode, please let us know. Our goal here at Wealth Huddle is to perform in such a way that we can become your number one tool for the wealth transfer that's going to be occurring within the next 5 to 10 years. Again, if you guys have any questions, please feel free to reach out to me directly. You can find me on Twitter. You can find me on Instagram. Looking forward to connecting with you guys soon. Enjoy. Thanks for huddling up.